Hey guys, so welcome back to the next video. This one is probably going to be the most important thing that you'll learn in terms of entries, especially, from now on, I would genuinely say this video will actually change your trading, especially coming back from a smart money concept sort of field where, there's so many times, there's so many opportunities within the market. Sometimes you have to think to yourself, how do I actually find the best points of interest? Now, one thing I would definitely say is trading is not about finding the perfect point of interest or the perfect order block, because there is no such thing. No matter how you try to define it, whether you use volume, whether you use whatever, still some of these areas will fail time after time after time. And it gets you thinking, how can I actually avoid entering and keep failing? Or do I just, for example, miss out on some of these trades? Now, one thing that definitely got me thinking is when I had issues like this, for example, in the past, where there's very, very nice, good looking setups, but for example, you wasn't exactly too sure or too certain on which type of area to enter. How do we actually stop that? One thing that definitely changed my trading around is this confirmation that you're going to learn in this video. And honestly, I don't think you're going to find something more important that will actually change your trading around. And it's the whole idea of an engulfed order block, an engulfed entry. Now, when I'm talking about this engulfed entry, you might be thinking, all right, I've already heard of an engulfed order block. How can I actually apply that to my trading? It's very, very simple. It's something like this, where, for example, we have this kind of area right here. Let's just say we get rid of the bottom one and we're just thinking about the top one completely. This is what the setup is going to look like. Now, usually, this is the type of entry that you would enter. A limit right there, stop loss below the lows. There are many, many times where, for example, something like this happens. You get something like this. Or, for example, a second scenario. You get something where price simply just induces it and then continues upwards. Or for example, it might be perfect, it taps it and then continues upwards, whatever. How do we actually avoid all of this? Missing out, losing the trade, or potentially entering it, and just keep it very, very consistent all the time. And it's the one thing you're going to use. When we get to these types of areas right here, we're going to use the engulfed entry guide. And this is exactly what I teach in the mentorship and everything like that. Once you get to a point of interest, rather than entering as a limit right here, what price is going to do is you're going to wait for, first of all, a candle. Let's just make this another color, dark gray, for example. Cool. What you're going to wait for is something like this, where price actually pushes down into the area. Let's just say it does something like this. And then obviously you've got the top wick as well. What you want to look for is the next candle to pretty much move into the zone. It must be the low of this whole kind of move right here. It must create the low. Then the next candle, what it will do is something like this, where price will exceed. So obviously if it's closing down, it will exceed the previous candle and engulf completely above it. Now, obviously, there are a few variations of this. The guys within the mentorship sort of do know about that and everything. But the main thing that we really do want to look for is something like this, where essentially, forget even this one right here. This is what we want. As soon as we push down into the area, the engulf candle, it closes above the previous area in terms of the body and the wick. The best thing is, for example, if this engulf candle exceeds even past the previous few candles. So eventually, price eventually moves down and then engulfs upwards, and that's going to be our entry. How does this relate to what we're doing right here? When we get into the strategy and everything, I'm going to re-explain this and actually apply it into the charts as well. But just as the theory right here, this is exactly what we're going to do. Say, for example, we've got our Asia range build-up right here. Cool. So we've got Asia range build-up right there. What we want price to do, let's just say our bias is to the upside as well. So we know that eventually we only want to be buying. What we're going to see is once we get our timings correct, so 8 o'clock, once we start to hit 8 o'clock over there, pretty much what you're going to look for is something like this. Price goes down, creates the bottom candle. The next candle will completely engulf it, exactly like this. Now guys, this is not something that I've created myself. This has been something since the beginning of all time, since all of trading. Any person that comes from a retail background, you'll know about this. You'll know about how certain engulfing candles about. This is pretty much all about candlesticks. But it's a very simple concept that we can apply to our order blocks. Once we get to our points of interest, then how do we actually enter? On the entry, as soon as this 5-minute candle closes, what we're going to do, long position, boom, entry below, let's just say our wick was right here. Entry below the low, and then obviously we can aim for the high, wherever it may be, for example. And that is going to be our entry. So guys, remember, pretty much if you do want to name this, just call it the Elite Strategy Confirmation. This is pretty much what we're going to be looking at on the 5-minute time frame. Just to note, you can apply this to pretty much all time frames. I personally use it even on high time frames as well, 15-minute, 30-minute. But it does work very, very well on the 5-minute because price is fast moving. We can take profits at certain zones. If it obviously pulls back, then, you know, fair enough. But yeah, I think that's going to be it for this one. It's as simple as that, guys. You know, honestly, when we do apply it, I'll give you just one little example just to show you how it actually does work. So right here, for example, this one just here, as you can see, a very, very simple approach. Price moved down into the point of interest down here. It moved back to the, sort of the mid-range of Asia range. As soon as it pushed downwards, obviously what I'm talking about, this is a bit of a variation where price is pushed down. This is technically the low. The next candle obviously didn't engulf it, but it's this candle that engulfed it. As soon as we get this candle that engulfs it, that's the one that we want to be entering on. And as you can see, stop loss below the lows, take profit 1 up here, for example. Again, another few examples over here. It's never going to be as simple as just a 3-candle thing, because if it was that simple, everyone would do it. Again, with this example right here, what do you think I entered on? As you can see, we took Asia highs right here, liquidity sweep. Then price is actually pushed downwards, but because of timing, yeah, so 8 o'clock. As soon as we hit 8 o'clock right here, this was the candle that pretty much closed below it. It's none of these areas right here just because it's before our area of key timing. And then as soon as we got this candle that closed below, it engulfed all of these areas up here. We're going to leave the stop loss above the highs. I'm going to make a more in-depth video about all of this and applying it. But pretty much these were just, you know, just a few examples to show you how we actually do it. Again, another example right here. This one is pretty much as optimized as you can get it. It pushed up into the point of interest, created the high, pretty much the high candle, and then the engulf candle pushed downwards, closed below it, and then we enter on the close pretty much, and then we leave the stop loss just above the high. So guys, very, very simple. Do apply this to your normal trading as well, whether you trade order flow, whether you trade flips, whether you trade, you know, God knows what. If you apply this type of entry, you're going to see that you'll never miss entries. For example, this one right here, I'm just looking at it, random trade in the market, price exceeded the highs, came back to this order block right here. Some people might take the risk and enter off the order block, but how do you know that price isn't going to come to this one, for example? You see what I mean? Then how would I actually enter? As you can see, as soon as there's a significant engulf candle upwards, I wouldn't say this one because it hasn't engulfed any, it's only engulfed one. That's never enough. Stop loss below the lows. Buy side liquidity aim for, so that's take profit 1. Where do we look for continuations? Obviously we have to check the high time frame, but as you can see, price just pushed upwards. You get this so many times in the market, so many times, guys. But yeah, it's going to be as simple as that. I'll see you all in the next one.